Does President Trump want to run the economy into the ground? In this video, I'm going to discuss a recent proposal that has been leaking out of the Trump campaign that, if enacted, would effectively destroy the US economy. Welcome to Analyzing Finance with Nick. Today's video, I'm going to talk about a Wall Street Journal piece that came out that Donald Trump's campaign allies are drafting proposals that would directly allow the president to intervene in monetary policy. A recent report from Nick Timiraos of the Wall Street Journal, and Nick Timiraos is kind of known in finance circles for being the Fed whisperer and is very close to a lot of the things going on in regards to DC, Fed policy, and the financial market, has reported that allies of President Trump and his campaign are drafting proposals that would attempt to get rid of central bank independence in the event that Donald Trump wins the 2024 election. There is a divide, thankfully, and not the entire campaign is for such a policy. But if this were to go through, that we effectively eliminate central bank independence in favor of direct presidential involvement in monetary policy, it would create a big economic disaster, and the inflation of the 1970s would look like a cakewalk by comparison of what would be the consequences of direct presidential involvement in monetary policy. They would basically give the policy that they are proposing is they would give the president veto power of the Fed chair, allow him to fire him midterm, which is not really allowed currently. And it would also effectively have a White House review of all Fed monetary policy decisions, which effectively gives the president a disproportionate level of influence on where interest rates are. We've never really had this since the enactment of the Federal Reserve. And even with supposedly an independent central bank, we've seen the dollar lose over 97% of its value since the Federal Reserve Act of 1913. And we have had several accusations of the Fed being politically compromised. And the most extreme example was when Lyndon Johnson physically threatened the Fed chair, Arthur Burns, who then the rest of his tenure kept monetary policy easy to please the president and finance his guns and butter policy. And the result was the wave of inflation in the 1970s. If you had somebody like President Trump, who's harped on a lot about having super low interest rates and that interest rates were too high when he was in charge, and that low rates stimulate the economy and they should always be trying to stimulate the economy, then it would probably be even worse than what happened with Lyndon Johnson and Arthur Burns. And you would get inflation at the levels of countries who have similar levels of irresponsible economic policy, such as Turkey and Argentina, who have historically kept interest rates well below inflation, and as a result have had high to hyperinflation. And this would erode the credibility of the US dollar and probably would eliminate reserve currency status if such a move were to happen. Thankfully, there are enough checks and balances, both internally within Trump's advisory team and externally with plenty of Republican senators who would oppose such a move, that this would never happen. But the thing is that, and it was not just President Trump, any president who especially has to worry about re-election risk or re-election of their party's risk, they're going to do whatever the short-term thing is to boost their electoral chances, which is holding interest rates low, because that stimulates borrowing, that allows valuations of real estate to go up, and that would cause in the short term an increase of economic activity, but at the expense of long-term inflation. And not to get too cynical, but personally, President Trump is one of the biggest beneficiaries of inflation because most of his net worth is in residential real estate, which in this cycle, as I mentioned in my last video about inflation, is the main driver of inflation. So where's all that free Fed money going to go in the event of massive stimulus and low interest rates? It's going to go straight into residential real estate, which will inflate the value of President Trump's properties. So if you want to get very cynical, maybe that's driving it. But I think it's more just that he just wants to have the government not be checked in terms of spending if it suits his goals, and wants the economy to always look good as long as he's in power from an electoral perspective. That would be the driver of this. If you were going to stimulate into this level of inflation, it would cause a higher high of than what we had just a few years ago. And so that's why I say that Trump's proposal for presidential control central bank independence would run the US economy in the ground. If you like these more current event type videos, including one I'm going to do about President Biden's unrealized gain policy, tax policy, which is even worse than this proposal that I mentioned about Trump in an upcoming video, feel free to like and subscribe and share. Thanks for watching.